Hello, investors, and welcome back to our talking points, where we look at everything you want to know about becoming a property investor. Now, today's topic, we're taking a slightly different look at the investment realm, and we'll be focusing a little bit more on the market as a whole, as well as the tools that are out there for investors to utilize in the pursuit of their financial freedom. Now, today we're joined by the CEO of the Destinator Group to talk a little bit more about his outlook on the next quarter. So, Johannes, thank you so much for joining us once again.
Hey Damien, hope you're well.
Great stuff. Now, having been at the helm of a group of companies during what can only be described as unprecedented times, and I know that's a term that's been used to death, what has been the one fundamental that you have learned in business and investment throughout this entire period?
Okay, so it's important to take a view on an asset and a specific asset class, and you need to understand why you are taking that view. And especially important is that it's a long-term view. We're not traders. So especially what happened now in the last 2 years with COVID, for example, obviously that caused a big stir in the market. But if you are in strong assets and invested in strong assets, those will recover if you have the time. And therefore, it's important to always make sure that you can buffer in the short term any such event, such as COVID now sticking out. That's a critical thing. As long as you've done your homework and you believe in the asset and you've got very specific reasons why, and you've taken a long-term view on it, you should be fine, but always make sure that you are liquid enough to handle the short-term ups and downs, because a good asset will always correct itself.
Johannes, in your article, you touched on the new company that was started, the Destinator Family Office. So could you please give us a little bit more detail and a rundown of what the Wealth Masters members can expect with this new partnership and venture?
Okay, so the great thing about the family office is that because I understand that it can be quite a complex process, setting up your structures, getting your investment portfolio going, dealing with trusts, dealing with tax, dealing with property management, finding the right properties, and then even looking at your estate planning. It can be quite complex, especially if that's not your field of expertise. And obviously, you spend your focus and your time on your profession to earn money that then needs to work for you. So the great thing about the family office is simplicity, essentially, because you build a relationship with a single person that takes care of all these various aspects for you. So typically on our existing, or let's call it the old model, there is quite a responsibility on the client to deal with different parties, because there are many aspects to your wealth planning. What the family office does is you get one central person who manages the relationship with you. Let's put that person in the center, or your relationship with the family office in the center. The family officer takes a wide view on your total portfolio and planning, and he assists you to implement it, and he deals with the service providers on your behalf. So it just makes it easier to put everything into one relationship and under one umbrella.
Hey, Johannes, for people who are interested in sort of taking this journey with the wealth officer, what is the process they can go through to start that?
Very easy. If it's an existing client, just chat to either your accountant or your trust advisor, or phone the Wealth Masters office or email them, and they will put you in touch. Secondly, if it's a new client, watch the webinar first. It's advertised on many platforms. Go through the webinar first and understand how we view wealth creation and protection. And then there will be a call to action on the webinar that will put you into or slot you into the process to start your journey.
Great stuff. Now, I'll mention a little bit more about that webinar at the end of the video, but let's take a look at the property market at the moment. So obviously, the wealth mastery system is very focused on property investments. So Johannes, what are your viewpoints on where the market is at the moment and where you see it going in the near future?
Yeah. In the near future, I'm expecting quite a bull market in the Western Cape, especially your areas where there's high demand. So it's driven by a few things. Number one, we've got the foreigners back. The travel restrictions have been lifted. I'm quite involved in the Cape Town city itself, the Waterkant area and so on. I'm quite involved in that market personally. And I get quite good information from what's happening on ground level. And the foreigners are definitely running around again, buying up property. We're already in a situation now where I think your best units, all your units that have got something special, whether it's a particular view or a particular element within the unit, most of them have been picked up already. So we've got the foreigners coming in with strong currency that obviously drives prices up. But then secondly, we have a massive amount of semigration. I think in the last quarter, it's something like 1,200 families that have moved down. It's so the Western Cape is popular, and I think it's actually also been driven, or that process of semigration has actually been sped up by COVID. I mean, look at what we're doing now. Pre-COVID, we probably would have had this meeting in person, and typically a lot of jobs can now be done remotely. So that has also driven the demand because people want to live in the Western Cape, especially the Cape Town area, and those who are in a position who can do the jobs from anywhere, which is ironically also more your higher income earners typically. They do want to move down. They enjoy the lifestyle here, and that's further driving prices up. So if I just focus on the Cape Town itself property markets for now, I mean, the key fundamentals driving it there is, and I say it so often, but it remains so true, and that that touches on your earlier question of fundamentals. Cape Town geographically is very small. You can walk through the city in 10-15 minutes from end to end on foot. So it's small. There's no open space for new stock. So any new stock that they build has to be redevelopments. And we all know that the price of construction is climbing and climbing and climbing. That further drives prices up. For example, the price of steel this year has already gone up by 30%. So that's on the supply side. So, supply is low, and that's economics 101. You want high demand, low supply. That will always drive prices up. That's probably the most basic fundamental that you can look at. We've got the foreigners who love Cape Town. I think it was now rated the third best city in the world, now recently again. It's got Table Mountain, which is one of the wonders of the world. It's got a booming short letting market because it's a very popular holiday destination. And of course, we also have our swallows coming in from Europe who like to spend 6 months of the year in the summer sun here. So all those things are driving Cape Town, and in broader strokes, the Western Cape market. The key thing is also the lifestyle, as I mentioned. And as a last point, I think our government structures, with the Western Cape being a DA-run province. Now, I'm not going to talk politics, but their track record in terms of managing municipalities is better than the rest of South Africa at the moment. So that's also a box to tick.
And I must say, as a Cape Town boy myself, I can completely understand why people will be rushing to want to live here. But now let's just talk a little bit about inflation. So how do you see inflation affecting people who invested in property?
Okay. Typically with higher inflation, you will see higher interest rates. That obviously increases your bond repayments. What I have to say is the interest rate increases this year so far have actually been very much in line with expectation. About 2-3 years ago already, my bankers told me that the specific bank's economists were expecting about a 2% increase during the 22, 23 years. And we've gone up by 0.75% now at this stage. So there's another 1.25% to go. I'm not expecting it to go higher than that. So yes, that will make an impact on your repayments. But again, that's why it's so important in property to ensure that you can deal with the short-term ups and downs by not ever overexposing yourself and keeping a bit of liquidity back. So because you need to give the fundamentals time to kick in. So what will happen now, because of the inflationary position, is costs are going up, so rent is going up. But it's obviously not immediately, it happens over time. So as the property owner, you now get higher rent. So that offsets your higher bond repayment that you have to make. Secondly, because the interest rate is higher, you have less people wishing to purchase property, which means your tenant pool is bigger. There's more tenants out there. Again, that pushes your demand for rental property up again. In my view, it's never a bad time to buy property because of these fundamentals. Actually, yes, there are ideal times and less ideal times, but I think it's never a wrong thing. You know, no matter, a lot of people say that, you know, they want to time the cycle, and I mean, just look at a property cycle. It goes like this. You don't have to time it perfectly. As long as you can buffer yourself for the short term, you will reap the rewards. Obviously, do buy in the right areas, do your homework. Don't be, you know, don't be roekeloos, as the Afrikaans person would say.
Now, Johannes, I just want to talk a little bit more about the short-term investment section that Destinator's been focusing on. So the group obviously has a great deal of investment properties in and around Cape Town. And just based on what you've said, you seem quite optimistic and enthusiastic about the market and the current status of rentals. So you took a bit of a perceived risk during the pandemic to invest quite heavily in the short-term rental market. So what prompted this, and what are the results of these decisions that you are currently seeing?
Again, it came back to the fundamentals. There's a couple of things that I mentioned earlier about Cape Town. So we were one of the few buyers, I think, in the area who kept on doing acquisitions all the way through COVID. And excuse me. And the upside of that, I believe, is that we've managed to pick up, as I mentioned earlier, the best stock is the stock that went first, which you'll struggle to find now. I believe we've managed to build up a very strong portfolio now at the right, well, actually at better than right prices, because we went against the market a bit. They said so that directly in line with how Warren Buffett does things. He says you need to be fearful when people are greedy, and greedy when people are fearful. So I knew that the fundamentals of Cape Town were there. But again, now the key thing was to maintain a buffer, to make sure that you've got liquidity, because when you lose in property, that is when you don't have a buffer. When something short-term goes wrong, something like COVID. Because obviously the yields were lower during the COVID period because we didn't have the foreigners here. There were actually a couple of months where, with the restrictions and the lockdowns, that we effectively were not allowed to take in guests. But the result of that has now been bought property at the correct prices. I mean, the property that's on my background here is one of our units in the Docklands. I know for a fact there's already been extremely good capital growth on this unit. I would never be able to pick it up in the current market at the price that we picked it up for. So the fundamentals were right, and we did make sure that we were liquid enough to buffer any short-term setbacks. And we are now sitting in a great position. Our occupation rates are very close to 100%. We are able to charge good daily rates again. So the portfolio is doing brilliantly now, and I'm very glad that we stuck to the fundamentals actually all the way through. It just goes to show, take a view on the asset and if you believe in the fundamentals, then stick with it.
Now, based on everything you've just said about the market and where it sits, is it too late to invest in the long-term or short-term property market, in your opinion?
No, I'm gonna handle both differently. So long-term rental market, I don't think there's ever a bad time. Is it as good an opportunity now as it was 2 years ago? No, but if you do the work, you will still find the good deals. They're just not going to be as freely available as a year, 2 years ago, but they are still out there. Also, as I mentioned with the property cycles a bit earlier, long-term rentals is quite a easy, low risk game. Just make sure you buy in the right areas. So rather buy than not buy. There's a Chinese proverb that says, when's the best time to plant a tree, and it's 20 years ago. But when's the second best time, and that's now. But obviously still do your homework. So that's the long-term rentals. On the short-term rentals, yeah, it's kind of the same principle. It is, you have to do a bit more work now to find the right deals. But they are out there. There is just less of them. But on the upside is, you now know, and there's a lot of data available out there, you now know that the short letting market is strong again. So number one, that will probably help you to qualify for bonds easier because the banks will see that. And number two, you can just go and look at what's happening in the short letting market currently and ask if you're going to use a manager to manage your unit for you, or a management company, ask them for comparative figures on similar units that you are looking at.
Now, final question, Johannes, what do you feel people should be wary of or look out for in the coming quarter?
The interest rates that will probably go up a little bit again. I'm expecting another 0.25 probably, and then at some later stage in the year, another 0.25. That's my opinion. So another 0.5% to go in the year. Work that into your monthly budget. Make sure you've got the cash flow to buffer that. Plus a little bit extra, obviously, always, because there is always a risk of a tenant not paying, or in the short letting market, a slow month. We are moving into, well, we have moved into the winter months now, where your daily rates are obviously a bit less than in summer. I mean, it's a seasonal industry in the short letting market, but just make sure you've got a buffer. I sound a bit like a vastgehaakte plaat about keeping the buffer, but it's so important. If you've got that, then property is a beautiful thing in the sense that even if you make a mistake, but you have time, it will correct itself. So just make sure you've got a buffer and you should be okay.
Brilliant. Johannes, thank you so much for your time and your insight, and I'm sure you've opened quite a few minds today. And we mentioned earlier about the Wealth Masters webinar. So if you want to make sure that you are on top of what we are talking about and what's happening, register for our free webinar taking place this weekend. The description below has the link. You can just click on that, register. It's an absolutely free webinar, and it'll tell you all about how the Wealth Masters sees property and investment through specialized trust. And I think that'll open a lot of minds as well to both new and seasoned investors who are looking for tricks that they may have been missing for a couple of years now. So until next week, we'll see you again soon. Thanks so much, Johannes. We'll see you soon as well.
Thanks, Damien. Just one last point I'd like to bring up. I almost forgot to mention this. So as I was saying, the good deals are a little bit harder to find now. Luckily, due to some of the relationships that I've built in the industry, we've got access to a new development in Cape Town. It's a beautiful, beautiful development. It's the first of its kind in Africa. Have a look at the webinar or inquire about it. I'm not at liberty to state the name of the development here, but we have access to it at the correct price, which you won't find if you are a normal property buyer out there. You're not going to find it on Property 24, for example. So if you want to buy at a discount in a new development in Cape Town, prime development, give us a shout.
We all love a little bit of mystery. So thanks for that, Johannes. If you are interested, just send an email to services@wealthmastersclub.com and we will direct you to the right people. So on that note, thank you so much, and we'll see everybody again next week. Bye-bye.